Good morning, good afternoon, good evening, traders from around the world. My name is Trader Allen. My website, wallstreet2easystreet.com. I created this website as a kind of a personal trading journal where I keep track of my thoughts and ideas and about how I consistently pull pips out of the market month over month. So feel free to stop by and read through, and maybe you'll find a little bit of information that might help you as well become on the road to being a consistently profitable trader. So let's go ahead and get into our trading video. Okay, I had gotten an email from a guy named Steven, and he was asking me about Forex price action scalping and how am I able to achieve such high consistency and accuracy in my trading. So I want to take a minute to go over and kind of cherry pick a few trade ideas, and it doesn't matter that I'm cherry picking them. I just want to show kind of how I manage the trade as they go along and things that I look for to help me achieve the accuracy that I have. So we're going to take a look here at a couple of them just by scrolling backwards here real quick. So what we have here is pretty much some downward pressure here. You can see the market's kind of going more from a upper left down to a lower right. So I'll be looking for more of a short entry, and just getting up here in the morning. It's starting my day about 8 o'clock in the morning. I don't want to have to go through a bunch of charts to figure out what's going on. So as I load my NinjaTrader platform, I also load currency strength meter, just so I can kind of glance at it and see where the markets are at right now, who's strong, who's weak. So I'll bring it up and I'll look and I'll see if the dollar and the yen, if they're stronger or weaker. I want to see those kind of running together, and then weakness across. So if I've got strong dollar, strong yen, I should see everybody else being weak. And or maybe the opposite way. I may have a weak dollar and weak yen, and then the euro and the franc or Aussie or New Zealand, they all may be strong. So I just want to get a quick overview of what's been going on, and kind of gets me a little bit more prepared for the day without having to visit 20 charts to see what's going on. So in our downtrend here, now I'm looking for a short position, and it's right there at that prime time where I should be getting an entry here. So should be plenty of orders coming in. So I'll start watching the market really good. So as the market comes along, we've made a low already, and watching it kind of bounce along here, get another low there. At this point, you realize that we now have equal lows. So once I get the equal lows from here and here, I'm going to take my drawing tool, and I do this every single time, and I'll block that out. And I'll start looking to trade the break of that range now. So now I'm really watching closely. I've got my order already set. I use ATM strategies, so my orders will be placed automatic. When they're ready, I'll hit the fire button, and my buy will go in, and my profit target and stop loss will go right in along with it. Make it quick and easy. So then I start watching the markets as they come along. And of course we bounce right back up there to the 50 again. And as the market comes back down, I'll be grabbing my box here and I slide it along as the market moves along. I usually try to move it out way ahead when I can, but in making the video here, I can't really do that. So I watch the markets as they come along, and I'm still looking for my break. As it heads back down, now I'm really paying attention, and I've got my finger right on the trigger, ready to go. I keep my block drawn out so I have nice and clear. I've already decided that I have downward pressure from the overall move of the market. So I am intensely focused right here on this section of the chart. And typically I'll have at this point, I'll grab my time and sales, and I'll have it setting here as well. so I can actually see those orders coming in. And I want to see if when it goes to break, I want to see a bunch of orders come piling in here. And when they do, I'll be piling in right along with them. So at this point, I'm ready to fire off my order. Okay, we've now broken out. So at this point here, now that I've broke and this candle closed, as soon as this candle closes, blam, hitting the button. Sometimes I get anxious and jump the gun a little bit early, but I try to wait till the candle closes just to make sure it's not just a fake out or a tease, as Bob Volman calls them. So at this point now I'd be in the market, and currently we're at 38.38. So it's probably about where I would got filled at if I would have entered here at probably would have got in here at 39, but including my spread, I probably would have got here at 38.38. So now I'm looking for my 10 pips. My automatic target is already in down here at 38.28, and my stop would be up here at the top. And just in case my stop happens to fall outside of this blue box, I'm going to click on the line for my stop, and I'm going to drag it down. So my stop would currently be setting here at the top of this line. Now I'm watching the market as it comes down. We have that big spike down on this one here. And then it starts going back up again. Okay, at this point, once we've come back up and we've made this high, I'm then going to grab my stop, and just for the sake of showing you, I'll throw a line in here real quick. So my stop would have started out at this level here. I'm going to grab my stop at that point, and I'm going to move it down here. So now I'm really about break even on the trade. So now there's no sweat. Don't have to worry about losing any money. Okay, we can see here the market has come back down again, and still not quite to my profit target. All right, and this happens a lot. You can see here, let me extend this line out. This happens a lot of times where the market will come right up and almost stop you out. And you get kind of nervous at that point because you're thinking, oh, I was in the money. Now I'm going to get out of break-even trade. And eventually, we've hit right here. My order would have fired off my sell. So this trade would have taken a little bit longer than what I would have liked, but it would have turned out profitable. You can see here we're into my no trading range. So at this point, I would not enter a new position anymore. I'm done trading for the day. So that would have been a nice, easy 10 pips right there on that trade. All right, so here we are again. Another range break is what we'd be looking for here. The market's just cruising along sideways here. We don't really have an upward bias or a lower bias. So we're just waiting to kind of get out of our trading range here that we're in. So at this point, I'd be looking maybe for a break of this level down here or a break of our high. This would be our high of the day right here. And as always, I grab my box to make it easier for me to see what's going on. So we can see we have our lows here and lows here. And I might even want to drag this back to this level. Something like that. So now I'm going to watch the market as it ticks along. And at this point here, we've broken out. Now I'm going to wait on that candle to close. And if we tick any at all higher than that close of that candle, then I would be in the trade. So at that point, I would fire off my order and probably get filled at either a 47 or 48. So now I'm looking for a 58 to get out. All right, so at this point here, you can see we would have got in at over here at this level here. This would have been a nice quick trade. This is the way I would have liked to have. All my trades would work, but unfortunately they don't all work that well. So that's typically what we want to see on a range break. We want to be in the market, out of the market really quick. That's what scalping is all about. Okay, now this type of trade here, this is another range break. You've seen two nice easy range breaks already. So this is where consistency and accuracy really starts to pay off, and where you really have to pay attention to what's going on in the market. So, you know, what we have here is we've had the market come up, make a new high on the day. So we're really kind of bullish at this moment. So just as any other range break, I'm going to go ahead and grab that and block it in. I do that, of course, just so I can see it real easy. In scalping, you've got to be quick. You have to be quick and you have to be accurate. So anything you can do to help out there really helps you. All right, so now we've broken out. So I wait on that candle to close, and if it closed, I would be in the market if it closes higher. So at this point here, I would be in the market. So here I'm looking at, you know, a 49 or a 50 level, which typically, you know, 50 levels, they're good support and resistance levels. So in reality, I probably would not want to take a trade right into the 50 level unless I was getting in about 5 pips before that, and I do what's called a trading to those profit and areas of supports and resistance, where I'd want to get in here and just get that 5 pips scalp, trading to those 50 levels or to the double zeros. But for the sake of our explanation here, because this happens to be a really good example, once we broke out, I'd be in here at the 49 or probably 50, where I'd get filled at. So then we watch the market as it comes back down a little bit, and at this point my stop is still down here at this level. We'll go ahead and grab us a line, throw it in there. So that's where our level is at the moment, our stop. So at this point, we're watching the market kind of bounces up again there at the 50 level. All right, so what I'm looking at here is my expectation of breaking out would go like this. I would expect the market to break out, go here, maybe come back this way for a bounce. Remember, I'm just scalping. So at this point, I would be looking for the market then to turn and move back up in this direction. That's my idea I have in my head of the way the market should be moving. All right, so now that I have this next little bounce here, so we've come up, down, we see we're stalling quite a bit. So at this point, I'm looking more to just get out of the trade at break even, because the trade is just obviously not going the way I had it planned, which you can see real evident here. So you can see how this trade would work out, eventually work out for a loss. And that's why it's really important to keep in your head exactly the way your trade plan is. My trade plan was to break out, maybe get a little bit of a pullback, and for the market to take off again. And they don't always go exactly like you want. You may want to see it come back down a little bit. You kind of want to work, you know, up in this kind of general direction. So anytime you have the markets where you expected a breakout, they pulled back, then they start kind of just hanging out sideways there, not going anywhere. At that point, your trade is no longer valid. It's no longer a valid range breakout. So you need to get out at this level, somewhere break even as close as you can. And if you get a couple of pips profit on it, that's great. But the main goal is just get out, because the trade is not going to work out the way you expected. Sometimes they'll continue on and they'll go up and hit your target, but so be it. That's when you look back, and after they've done that, that's kind of hindsight trading. So our goal is to protect our money at all times. So that's an important lesson there. I hope you all understand on consistency. Okay, I got one last trade example I want to show you. The video's starting to run kind of long. So this setup here, this would be a first break setup. It's also a double doji setup. So you got the combination there. So it should be a pretty good entry for me. So I'd be wanting to take this. We're actually in a no trading zone. So in reality, if I had this set up at this time of day, I would not be taking it. So we got our double doji pattern here. We also got our first break. So at this point, I'm looking to go long above that doji candle. All right, so at this point here, I would be wanting to go long, so I'd be trying to get long here, probably around that 18 level. All right, so we're watching the trade closely. You can see here we got a little bit of reversal happening. So at this point, what we would want to see is we want to see our trade come up here and make a high, a new high. But you know, as we know, things don't always go straight up or straight down. So at the very least, we want to see a little bit of a pullback, and then the market continue higher. So this would give us a tipping point. So we're looking for our tipping point right here, where we'd move our stop up to lock in profit. So we're watching the trade, your fingers on the button ready to sell in case something goes wrong. All right, now we have our next candle here, which is a very bearish candle. And at this point, you know that the bears are still quite in control of the market. So at this point, I want out of the trade. Even though my stop is down here at the green line, it's 1 pip below my formation of my double doji candles. I really want out of the market at this point because I know the bears are now totally in control. My trade plan of pullback and up again is not going to work. So now that I have the bullish candle here where I'm back to break even, at this point I'm just going to get out of the market. The trade setup is not a valid setup. It's now failed. So I want out. So I would get out at this point here at break even, have a break even trade. Now I'm ready to go on and look for the next setup. And I have minimal or no damage to my account. So we can see here, had I just waited for the stop loss to get hit, I would have got out here at about the 14 level, and I would have ended up with 4 pips loss. So instead of having that loss, I'm out at break even. So how did I know to get out? The bears told me right here. They're well in control of the market. So I hope you all enjoyed this video, and I hope you get a little bit better understanding of controlling your losses. And it's not about keeping a tight stop where the market comes down and takes you out all the time. It's more about keeping a really close eye on the market. And once you realize that the trade is likely to go against you, the odds are now against you, you want out. Just take the break even, take the 1 pip, whatever you can do to get out and control your losses and move on, get that next entry, and hopefully it's a nice 10 or 20 pip smoker. So hope you all enjoyed the video, and I'll try to post some more examples. I'll try to get them on some in real time, but typically if the market's moving, then I want to be trading instead of making videos. But I'll try to see if I can get something together where it's more real time. All right, hope you all enjoyed the video.